Hey everyone, welcome to a Optimum FX weekly analysis. It's currently the 13th of February today, 2022, so about Sunday afternoon where I am, and markets will be open in about 12 to 15 hours. So as usual, we'll be analyzing our global equities, going through our major currencies, and be having a look at gold as well. But first we'll be looking at what macroeconomic data is going to be released, then go back to the charts and map out potential trade ideas with the fundamental and technical confirms. Okay, so firstly we'll just go across the US. So don't really have anything on Monday and Tuesday. So on Wednesday we do have producer price index. So pretty much producer price index is an inflation indicator on the producer side, so not so much the consumer. So what the producer manufacturer is actually paying for goods and services. Okay, and then on Thursday we have, more importantly, retail sales. So this will be a more consumer confidence sentiment, as we do know that inflation year over year hit 7.5% in the US. So overall we do want to see some confident or some pretty much status quo or high retail sales numbers, because it's going to be showing us the actual confidence for the average US consumer. Okay, so that's one thing we do want to keep in mind. Then later in the day, obviously after retail sales, we do have the Fomc Minute. So pretty much if there are any revisions or amendments to the Fed's previous meeting where possibly they are encouraging or leaning towards more like a 0.5% hike rate increase, possibly if the inflation numbers still come out hot, there is a good possibility that we can see a lot more inflows into the dollar, and a lot more outflows from equities, gold, and more of our riskier assets. Okay, so that is a possibility, but I mean that's a speculation for now. But we just have to have that in mind when we are trading our major currency pairs that are in correlation with the dollar. Okay, so next thing on Friday, we just have initial jobless claims and housing starts as well. Okay, so moving on to UK. So on Tuesday we do have pretty much the employment numbers being released. So we'll be watching very carefully. Obviously we do want to have increased employment numbers to show there's a lot more confidence across the UK economy, and then if we definitely see a lot more consumer confidence and we do see some good CPI numbers, we can definitely see that the UK economy is flourishing, and possibly they are on the path to potentially hike rates or hike further rates in the near future. So on Wednesday as well, we do have the CPI, so inflation numbers, and the PPI numbers being released at the same time. We do have the retail price index on Wednesday as well, and then to end the week we do have some retail sales. So like I was saying previously, across the US, more consumer confidence, more consumer sentiment data. Okay, so next thing we have is Europe. So on Tuesday we do have employment numbers and GDP numbers being released, and on Wednesday we do have industrial production numbers, and to end the week we do have some preliminary consumer confidence numbers for the month of February. Okay, so and then the final numbers will be released at the end of the month. So moving on to Japan, Tuesday we do have GDP numbers being released, along with industrial production. Obviously we'll have a very good indication about the industrial production after we do see the GDP numbers, and then on Thursday we do have merchandise trade balance numbers, along with imports and exports numbers as well. Okay, so and then we do have the CPI numbers being released to end the week on Friday. Moving on to Canada, we do have inflation numbers coming out, so consumer price index numbers on Thursday, and we do have the Bank of Canada, member Lane speaking subsequently to that data, and we do have retail sales being released to end the week. Moving on to Australia and China, we do have the RBA meeting minutes, similar to the FOMC's meeting minutes. Obviously, if we do have any revisions or amendments, obviously that can bring some volatility to the Australian dollar, possibly even to gold, and to Australian equities as well. Okay, and we do have Chinese inflation numbers being released, so obviously that really ties into the Australian economy as well. And then on Thursday we do have employment numbers being released. Okay, so that's enough about the macroeconomic data. We'll just quickly analyze across the board. So just to pretty much just go over global equities. So obviously it's end of week on Friday. Like later in the session, we did have a bit of a fear sentiment, which I will go into detail about gold and the dollar very shortly. So obviously with that fear in the market, we actually did see across the board our major equities did push through to the downside based on this fear and uncertainty doubt headline, except for China 50. But yeah, across the board, we did see equities just have a fat drop. I know the Nasdaq dropped a few percent on the day. So mainly the reason for that is Russia has accumulated their troops around the border, and pretty much Joe Biden has actually advised that they will be conflicting war very shortly. No timeline when. So obviously that fear sentiment, any sort of like fear, fear sentiment can be derived from war. Okay, so, and obviously if there is a war in place, we can definitely see commodities from the respective countries, especially in Ukraine, push to the upside, whatever those commodities are, and we can definitely see oil start to push to the upside. Okay, because it really is going to limit the supply of those commodities. Okay, and makes the commodities more scarce or scarce. Okay, so limits the supply and increases the demand overall. So that's one thing to keep in mind, but obviously this can possibly just be completely phased out to start the week, but we'll just adapt to the headlines very carefully. Okay, so moving on, I'll quickly show you gold as well. So gold just had a little clean push to the upside. Obviously we've just been in this nice steady bullish corrector structure. We did actually push a bit below here. I was really expecting us just to get some rejections, possibly at this previous high time frame range. That didn't happen. We just steadily pushed the upside, and obviously you had it engulfed here with the inflation numbers, then started to push back down. But yeah, we just had a clean break to the upside. I wasn't able to capitalize on that move, but yeah, it was just really good just to review the following day. So keep that in mind. And then dollar had a little nice push to the upside here. Okay, so very nice, and ideally we actually did start to clear above this little range here, right? So we're just trading up and down in this range, trading up and down, and then we finally broke above. And what I really want to do is ideally respect this higher time frame key level, okay, and start to break and push to the upside. Safer buys above here, and we can start to short our riskier assets as we are doing on the macro high time frame. Okay, so first one is euro. So euro dollar, when we're just analyzing a price action, obviously we did have this nice little push here to the upside. That was just based on the ECB's forward guidance of possibly steadily reducing the pandemic emergency purchasing program, so pretty much decreasing liquidity out of the market, just to save you from the bullcrap words that they speak about, just to confuse people. So pretty much ideally they want to steadily and gradually decrease liquidity out of the market and possibly hike rates by the end of the year. So that is a possibility. Obviously that was guided by the President Christine Lagarde. So yeah, when other ECB members, for instance, in the ECB or any other central bank, when they mention about hiking rates, it's not as important. But if the president or the governor, so forth, or the chairman talks about it, then it obviously is going to have a more of an impact, because they have pretty much more authority of what can actually happen and what can actually occur within the market. So that's enough about central bank speeches and their sentiment and so forth. I don't want to get too worked up about that, but I just really want to analyze the price action here, right? So obviously we did have this nice little push to the upside here, and now we've just been consolidating at these highs, right? So yeah, we've just been consolidating at these highs. We've just been steadily chugging to the downside. I was actually looking for some clean sells here early in the week. Unfortunately, that actually didn't happen whatsoever. Like, it just wasn't clean whatsoever. Didn't happen here either. Then we had the whipsaw with the US inflation numbers across the board, but we did have a nice sort of retest here, and then we actually started to push to the downside. Obviously, that was in the last few hours, which was based off the war fears in Ukraine with Russia. Okay, so just got to keep those things in mind, right? So ideally, what I am expecting here, so I'm going to go and put it on the 4 hours so we can actually see it a bit more clearly. So ideally, what I do want to see here is if we can actually retest these previous, the previous low here. So roughly, I think that's 1.139 or 850. So if we can retest 850, come to the downside, clear these lows here, and then I'd be targeting roughly about here. So that'll be like a nice little, so this will be like a medium risk short, because I'm just following the current structure here, and obviously the guidance from the Federal Reserve, obviously we are going to have a lot more inflows into the dollar in the longer term, as you know, they're possibly going to be hiking rates 5 times this year, and possibly we might end up in the US at the 2% interest rate mark. Okay, so obviously that's all speculation, nothing set in stone, but it is definitely a possibility. Okay, so on the high time frame across our riskier assets, I'm still following a risk off sentiment, so seeing a lot more inflows into our safer haven assets, and you know, seeing riskier and seeing a lot more outflows from our riskier assets. Okay, so that's what I'm seeing in the long term. But what I'm expecting now, I'm expecting like a little pullback to 850. Us to come down, we might get like an impulsive break below, but to me, I'll be taking those safer sells once we start to retest 500, or even possibly 630. So that's what I'm seeing at the moment, and then we can push further to the downside and continue our next leg and start to push further to the downside, and you know, just steadily break down these levels. Okay, so that's what I'm seeing at the moment on euro dollar. Obviously we had this little messy range here, and we didn't really have enough, I guess, buyers order flow or buy side liquidity to start pushing above 800. So yeah, we are now just falling further to the downside. So that's what I'm seeing there for EU. Next one is GU. So with GU at the moment, I was able to get a couple nice trades, but it was just like messy in this range. But ideally, I am more favoring the shorts. I know the Bank of England have hiked their rates. I think it's twice already, ever since last year. So it's once or twice already. But if we do see some good UK numbers, we can start to push the upside. But like overall, we are just starting to exhaust, you know, roughly at these price levels here. So I don't really have a bias to start going long on GU. Like, to me, my overall bias is shorts. Okay, because obviously we did have this nice rally up from 133 all the way up to like 136, and now, you know, possibly we are just starting to exhaust. We are failing to break above, you know, certain key levels. We are failing to break above these key levels here. I mean, we did push up, but we never closed above. So remember, candle body closures are very important on any sort of time frame. All right, so it's very messy at the moment, but ideally I just want to get in some shorts below here, right? Because I know there's going to be a bunch of sell side liquidity here, and then for a sort of swing trade, I'll be going from 135 200 all the way down to these previous lows here. So that'll be like so that trade will probably take a week or so to actually play out, and I would need to see some hawkish comments from the Federal Reserve and probably some weak UK data overall. So that's what I'm seeing at the moment on GU. So we'll just wait patiently, but to me, if we can get some closures below here, I am looking to take some shorts and possibly waiting till we come down to this level for 134,600. So with 134,600, I'd probably want to get like a clean break, and we can target some further sells to the previous low. Okay, that's my bias on GU. So like overall, I don't really want to go in and target like any longs. Okay, obviously we can get some high risk, high reward buys here, but based on the liquidity and based on the momentum at the moment, it's really looking like we are exhausting. So to me, it'll be a lot clearer once we start to break and close below here to take some further sells. But possibly we can take some buys once we start to clear above 136,100. But to me, I'm just sticking with my main bias to shorts. All right, so GJ at the moment, let me fix this one up. Yes, so GJ at the moment, we are starting to exhaust these highs here, and we're playing in this range like the last few days, and it just got completely engulfed. Okay, so we just completely engulfed here, and ideally I want to see a breaker structure here, right? I want us to close below, what is that, 156,300. If we close below 156,300, I would ideally be targeting 156 flat, and then possibly 155,500. Okay, and then just working in these increments. Okay, and then working our way through the levels. Obviously we did have some nice bullish price action here, had a lot more inflows into our riskier assets, obviously based from the Bank of England, so the central bank being a lot more hawkish and having a more tighter monetary policy stance. But now we are just being steadily chugging to the downside. So if we do see more fear sentiment, more bad data in the UK, we can potentially push to the downside. Okay, but yeah, to me, if we cleanly close below here, I'm looking for shorts. Okay, I'm really looking for shorts. I'm not really looking for buys, but it's really looking like we are starting to exhaust roughly at these highs here. But ideally, if I am going to be going for further buys, we need to close above 158 to take some further buys. Okay, but that's what I'm seeing at the moment with the current price action. It's looking like we are starting to exhaust. Might be surprised if we just like play around this little range, but obviously there's a lot more inflows into the dollar compared to the yen, but overall I do have a short bias on GJ. So, and possibly we're looking like we are starting to exhaust at this area here. Okay, next thing is USD Cad. So USD Cad has just been playing around in this range. Obviously USD Cad hasn't been appreciating as much due to the price of oil, and we understand how much oil is correlated with the price of the Canadian dollar. Okay, because a lot of the Canadian dollar's GDP comes from oil. Okay, and I'm pretty sure the Toronto Stock Exchange, I'm pretty sure at least like 10 companies are in the oil sector, are in the oil and gas sector. Okay, and I'm pretty sure that's why the TSX stock index is one of the only country indexes that has appreciated well this year so far, just based off energy. But what I'm seeing at the moment, I'm seeing us failing to close below this little price level here, and once we start to get some clear indications or clear closures below here, I will take some buys from 127,550 and potentially take them up to these previous highs here. That's what I'm seeing on USD Cad. There's a possibility that we could get a nicer retest, come up above here, and then continue to push to the upside. But that's what I'm seeing at the moment in USD Cad. So I want to get a retest of these previous highs here, and then we can start to push back to the upside. Dollar, I really discussed it earlier before, but ideally if we get a retest of 95,900, I really like to get a retest here. Obviously sticking with the current sentiment from the Federal Reserve of a lot more inflows into the dollar based off their stance, and that's why we're seeing a lot more money being flooded into treasury yields as well. So what I'm really expecting here is just to get a retest here, and then us just to possibly get to 96,200, break above here, and then we can go to the next key level of 96,500, give or take around that price level. Obviously we have had this nice little bullish structure start to form. We have fallen from the downside, from these previous highs here, but it's looking like we've seen a lot of sell side exhaustion. We've seen a lot of buyers being relieved out of the market by sellers, but ideally I don't really want to snap back below here, because then we could see a bit more sell side liquidity. Obviously more sell side liquidity once we start to break below 95,200, right? But once we actually start to retest 95,900, failures to close below, we can start to push to the upside and continue back up and go for the key levels. Okay, so that's what I'm seeing at the moment. But lastly, we'll go to gold. Give me a sec. All right, so we'll go to gold. Obviously really discussed it before. I know I've discussed this on my channel, but I'm expecting, like, with all the Fed rate hikes and the sentiment from the Federal Reserve, I'm really expecting gold to push to the downside. I'm actually expecting gold to come down to where is it? Yeah, I'm expecting gold just to come down to like 1,700, like give or take. Like I'm expecting us to come below 1,680, like overall. So we've just been steadily chugging back to the upside. Obviously this is just based off that fear and uncertainty doubt headline from Ukraine and Russia, but overall that is my long-term bias. But like at the moment I'm still adapting to buyers, right? And if I'm really adapting to buyers at the moment, I want to get a retest of 1850. I want to get a retest of 1850. Hold on. Yeah, so I want to get a retest. What's that, 1850? Yeah, 1850. Get a retest here, get a retest, and we can go up to the next key level. Okay, so next key level to me would be that 1860 mark, and then possibly 1872. So yeah, that's what I'd be looking for on gold at the moment. Obviously the bullish price action is so freaking strong, and we did have this nice little run up here to the upside, but overall I'm looking for like a retest of this previous high here, and we can start to push to the upside. But I'm only going to do that if we do get some high time frame closures above here. I don't really want to get any closures below here, because that'll just show me that there's a lot more sellers in the market, and we can actually see price be pushed to a more favorable demand zone possibly. So probably I'm expecting price to get like a deeper pullback to 1836, and then we can continue back to the upside. But obviously with that in place, we would need to see a lot more outflows from the dollar and a lot more fear and uncertainty headlines, okay, in order for that to happen. But overall my high time frame bias is shorts, but I can't really be shorting gold with the current price action, with the current momentum. Like it's very optimistic to start going short, but overall what I'm expecting with gold, get a nice sort of retest here, we can get a bit of a pullback, and then we can continue back up to the next key level at 1872. But ideally I do want to fill this wick here at 1860, and then we can potentially get enough buyers order flow to continue back up to 1870. all right, so these are pretty much the trade ideas across the board. If you enjoyed the video, please feel free to like, share and comment, and yeah, good luck trading this week.